BHP obviously being the one or the largest company now on our index. I think it comes around about 11% of our index is now BHP. So if BHP is having a good day or green on the screen, you can pretty much bet our index will also be moving higher as well. But certainly CBA does hold a fair bit of index weighting as well. So two biggest companies going head to head today. It's going to be interesting to see who wins.
Well, you know who wins, but I'm not gonna pip out that result. But firstly, I wanted to ask you about the CVA, because we've got a lot of issues right now in terms of Australia. There's a lot of risk to consumption. The RBA appears to be in a hiking cycle. Maybe they don't go now. Maybe they go in August. Are you at all worried? Because a lot of the banks, it wasn't too long ago that they stopped provisioning as much for any kind of downturn. Do you think that we are going to start to see weakness in the housing market, weakness in the Australian economy?
Yeah, look, we're definitely seeing weakness in the housing market at the moment, albeit though Sydney in the last 2 months has actually increased or gone up. So it's turning around the housing market here in Australia, and certainly the banks have shied away from a lot of investment opportunities, not in the housing market, but in the share market. So the banks have really pulled back on a lot of those provisionings, as you said. Banks mainly now are just basically deposit takers as well as home loan takers. That's pretty much their business as all. But CBA has been better placed, or looking to be better placed, to capitalise on a lot of innovation. They're working with AI. They're working with a lot of customer strengths, and that's moving them in the right direction for its sustainability, but also to radically change the bank's cost base going forward. So it's quite interesting to see how that's working. But we are seeing a lot of institutional investors reducing their weightings in the major banks in the March quarter. It resulted in the retail holdings were higher than institutional higher going forward. And we're seeing a lot of short interest in the banks from the institutions as well. So it's interesting to see how that is all going to play out.
Right, but how much can you go wrong with CBA, given it's the most weighted stock on the index? I think 8% on the ASX 200.
Definitely 8%, and it does trade at a 50 to 60% premium to some of the other banks as well. So look, it certainly looks like it's interesting to see how that goes. But I think the banks have delivered their best provisions or profit growth in over a decade, supported by around that 12 to 15 basis point margin uplift that we've seen, obviously with higher interest rates going forward.